Well, just as we begin this program this morning, Tesla has bounced strongly into the green on very, very good news on many, many different levels. The market is completely down the toilet because of not so good news. But in this market, we, of course, don't know whether good news is bad or bad news. You know what I'm talking about. But we'll talk about all of that, and then we'll look at the market and see how things are going later here in the program. First of all, let's start with this really good news. This is from AJ. He's first out with a couple of big news pieces this morning and giving his usual great color. So ASS, Actual Smart Summon, has been released today. This is going to have a positive result on third quarter results. He says, similar to the auto park feature release, which drove a meaningful one-time gross margin effect in the first quarter, the release of ASS will drive a deferred revenue release recognition in the third quarter and have a positive gross margin effect. In relation to the auto park feature, Tesla's CFO said that the first quarter 24 earnings call that the impact of pricing actions was largely offset by reductions in per unit costs and the recognition of revenue from auto park feature. In fact, if we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto park auto margins improved slightly. So he says he's going to have to change his or amend his third quarter Tesla earnings outlook. So anyway, that's out. There's a couple of other reports out this morning, people testing it and trying it and going, wow. But of course, that's what we always see with the release of some of these new things. We'll see as the day progresses, whether I'm sure maybe Larry and others. And so I have tonight is Nicholas. We'll see if Nicholas got his and whether he's had a chance to use it. All right, then also from AJ, as I mentioned, he had two breaking news pieces this morning. So Tesla delivered a strong 14,400 vehicles in China for the week ending September 1. He says this implies that Tesla currently sells a 12-week average 156,000 vehicles. That's significantly ahead of last year's 150,000 vehicles at the same point this year. Says the month of August was Tesla's all-time best sales month and one of Tesla's all-time best second months of a quarter sales month. This suggests that Tesla will end the third quarter with very strong overall sales numbers. We have seen a weakness in local competitor sales, suggesting that Tesla sales are holding up better than the competitors. I think he's talking about in China, but he might be talking about, he says local. So maybe he's talking about US. At present, it appears likely that Tesla will deliver an all-time high sales record for the full year in 2024, with Brian White claiming we're still on track for 2 million. I'm trying to figure out how we get there if we're only going to barely hit 500,000 this quarter, but we'll see what happens. All right, from Yahoo Finance this morning, Tesla plans to produce a six-seat variant of its Model Y car in China in late 2025. Two people with direct knowledge of the matter said. So Tesla has asked suppliers to prepare accordingly for a double-digit increase of Model Y output at its Shanghai factory, said one of the people who declined to be named, as the plan is not public. And Tesla didn't respond, of course. It's not clear how Tesla would raise production. According to this article, we know, of course, that they have a higher throughput, which allows them to create additional expansion. They've also apparently, I didn't know this, they're awaiting approval to expand their current 172 acres of former farmland. So they've got a 6% increase on domestic and overseas Model 3 deliveries between January and June, blah, blah, blah. Okay, Tesla released the Model Y in 2020 and has been revamping it under a project dubbed Juniper. Reuters has previously reported that variant will seat 5. This will launch in early 2025 rather than later this year, according to one of these two people that they were interviewing. The addition of the 6-seater variant underscores pressure in China from domestic rivals because Tesla doesn't have a 6-seater. Those rivals have unveiled at least 4 Model Y competitors this year. Names a couple of those: the Envo L60, the Neo, the 7X from Zeekr, etc. So the Model Y crossover is the best-selling car in China among all power types, with January to June sales of 207,000 vehicles, although the Seagull from sedan is catching up. Tesla expects overall China sales to increase in the third quarter. Yeah, definitely that's going to happen. It's a big third quarter for Tesla in China. All right. So they're saying that sales could also get a big uptick in China, but also elsewhere if the full self-driving feature is released fully in China. Okay. It says Tesla sells a 7-seater in Model Y in the US, but the cramped third row would not be popular in China, according to those who were being talked to. All right, this is an interesting one about Tesla sending out documentation to the Australian government. Some documentation with regard to full self-driving and eventually automated driving. So listen to this, listen carefully. Tesla's stance on remote operation and licensing highlights their desire for a flexible yet safe regulatory framework for autonomous driving systems, ADS. They suggest that responsibility for remote operations should be clearly defined through contracts between the ADS entities like Tesla, which develops and sells the ADS, and third-party operators, companies that might offer services like remote monitoring of driving of autonomous vehicles. This allows flexibility based on specific business models. So not talking about just Tesla, what Tesla might do, but what others who offer ADS might do. So for example, imagine Tesla sells autonomous trucks to a logistics company. The logistics company might not have the expertise to manage the remote operation of these trucks, so they contract a specialized third-party operator who provides remote monitoring services. Remember, this is coming from Tesla. These are Tesla's words. The third-party operator would watch over the trucks as they drive autonomously, stepping in if something unusual happens. Tesla suggests that the legal responsibility for any issues during remote operation should be clearly outlined in the contract between Tesla and the ADS entity and the third-party operator. I'm sorry, between Tesla, which is the ADS entity, and the third-party operator. This way, both parties know who's accountable for safety and compliance in different situations. Tesla differentiates between remote monitoring, where operators assist the ADS in decision-making, and remote control, where operators directly manage the vehicle. They argue that these two activities require different regulatory approaches, with remote control needing stricter oversight. Tesla also emphasizes the need for streamlined legal frameworks that reduce complexity, particularly concerning federal and state law interactions, to encourage innovation and market entry. They propose that remote operators should hold valid driver's license, have no recent criminal record, and receive specialized training from the ADS provider. This indicates Tesla's anticipation of remote operations becoming a standard part of autonomous vehicle services, particularly in commercial applications like logistics or ride sharing. Okay, so this is what I've been saying, although I think it's a little more than I've been saying. I thought maybe they would require some kind of remote operation that would intervene because the computer saw that there was a problem, or because the person in the car saw that there was a problem, or in the truck. This is suggesting that these would be on at all times. Again, I can't imagine, more like for Tesla, maybe one operator managing 40, 50, 100 cars. But this is interesting. This is super interesting. Overall, Tesla is pushing for a regulatory environment that balances safety with the flexibility needed to scale remote operation capabilities and support the broad commercialization of autonomous vehicles. Also interesting here is the idea that third parties might be involved. And one individual asked Grok what could they possibly mean about third parties, suggested it could be companies like Microsoft or NVIDIA. Of course, it could be Tesla themselves. All right, this is Randy Kirk. That is the Tesla news for the morning. Now we've got the general news, and that'll support why the market is down this morning. Hit the like and subscribe button if this stuff is at all useful for you. Notify. You got Brian White come up later this morning, and then Nicholas Gibbs tonight. And then, of course, joining Patreon. If it's worth $3 a month or $5 a month or $10 a month, join Patreon, help out the channel. All right, here we go. Kobeisi's letter this morning says government hiring is inflating job numbers. Private sector job growth as a percent of total payroll growth fell to 38%. So that means 62% of job growth was the government. Historically, every time the private payroll growth share fell below 40%, the U.S. economy was already in recession, like Randy's been saying. This also means that most of the employment growth over the last few months has come from government jobs. Over the last 1.5 years alone, the government created nearly 1 million jobs, the most since the 1990s. Meanwhile, the private sector hiring rate fell to 3.7%, the lowest level since April of 2020. Okay, so there you go. Here we go, though. CNBC says this: U.S. crude oil futures fell more than 1%. Oh, yeah, they did. The overall drop in U.S. crude futures over the weekend, wait till you see. So this is largely returning to where they were at the end of the year, as OPEC is poised to increase production in coming weeks and China's economy remains soft. OPEC delegates have indicated that the group is still planning to increase oil production in October. Manufacturing in China, meanwhile, fell to a 6-month low in August. According to data released over the weekend, China is the world's second largest importer of crude oil. So yeah, but that's not all. China's manufacturing sector being in the toilet is not helpful to any place anywhere in the world. It indicates there is a potential world recession. This is from Forex Live this morning. U.S. August final S&P Global Manufacturing PMI, that is Purchasing Managers Index. They had originally been at 48, comes in at 47.9. This final look at August manufacturing from S&P Global. Preliminary was, I'm sorry, they got this wrong. I'm sorry. Yes, they got it right. Preliminary was 48. It's now 47.9. July final was 46.8. So it's actually declining at a lower level, but still declining. Production declines for the first time in 7 months. Did you hear that? Production decline. Production declines. New orders fall at the fastest pace since June of 2023. Employment drops for the first time this year. Input cost inflation accelerates to a 16-month high. I don't know if you guys watched my show yesterday where I talked about the different places where what's happening with inflation in all the different sectors. Maybe you want to go back and take a look at that. Forex Live also coming with an article on total construction. The numbers came in this morning, are down for the month, but still higher on the year. Seasonally adjusted annual rate, $2,162 million. That is 0.3% below the June estimate. It's 6.7 above July 2023 estimate, and year-to-date for seven months is 8.8 above the same period in 2023. So total construction, that's total construction. Problem is that it's all government and the private market construction not doing so great. From the ISM homepage, this is manufacturing again. New orders and these are two different reports about manufacturing coming to the same conclusion. New orders and backlogs contracting, production and employment contracting, supplier deliveries slowing, raw material inventories expanding, customers' inventories are too low, prices increasing, exports and imports contracting. Whew. Wow. Okay. They say this about those numbers. This is according to Mr. Fiore. While still in contraction territory, U.S. manufacturing activity contracted slower compared to last month. Demand continues to be weak. Output declined. Inputs stayed accommodative. Demand slowing was reflected by new orders index dropping further into contraction. New export orders index contracting slightly faster. Backlog of orders index remaining in strong contraction territory, and customer inventories index at just right level for them. For more output featured by production, output continued in moderate contraction with production sagging further, while employment contracted slower as compared to July. Panelist companies reduced production levels month over month as headcount reductions continued in August. Okay, well, then you wonder why the markets are in contraction this morning. The Dow Jones down 467 as of this moment, with Tesla up $4.10. So Tesla is responding to the very, very good news. Plus, also, you'll notice in a minute we'll be talking about bond prices. So I think the market this morning is very upset about the economy. The bonds, however, are also reflecting the news last week being good, the news this morning not being great, suggesting that the Fed will be acting after all next week. But we got a lot more news this week. I think and next week too. I just don't know. It's hard. It's a hard guess right now. But as of this morning, that's what the markets are telling us. So Dow down 480, NASDAQ down 292, S&P down 70. You've got all the Magnificent Seven except for Tesla and Microsoft. Microsoft is up 19 cents. But you've got like Meta down 7, Google down 3, Apple down almost 4, and NVIDIA down 7 this morning. Solidly, horribly down. You've got I just passed up Costco just for fun. Even Costco is down. You've got the Cathie Woods mixed because why? Because, well, but mixed, I would say mixed it down. The only green is 0.0000 and a penny. So I would say Cathie Woods are not really happy this morning, even with bonds, the yields going down this morning. So percentage-wise, we've got the Dow. We've got the Dow down 1.14%, NASDAQ down even more, 1.63%, and S&P down 1.22%, Tesla up 1.86%. All right, let's go ahead and take a look at the bonds, which are part of the big part of the story this morning. You have got the U.S. 10-year down 7.6, okay, down 6.9, just changed right in front of my eyes. Now 7.1. Okay, it's jumping all over the place. Let's just call it 7 basis points at 3.84. So down back into the 3.8 area. We have got the 2-year also down 6.2 basis points this morning at 3.865, putting those two a little over 2 basis points apart, and the 2-month up at 5.22. That's 140. You know, I barely care what I mean, I don't understand what is happening with the short terms. And I'm not sure anybody else does either right now. All right, let's go ahead and look at the oil market as we just reported on. Listen to this now. You've got oil, which was actually, I think, at the Texas Intermediate was actually under 70 a minute ago, but now still down $3 for the day at $70.52. You got Brent at 73.98. Both of those down over 4%. Brent down 4.57%. Natural gas down 1.65% at $2.09. Staying above $2 though, so that's interesting. It had been under $2 earlier last week. Gold up, down this morning 21 at 2,506. Contemplating going back under 2,500 again. That's interesting. Silver down 3.51%. Copper down 3.61%. Commodities apparently tanking along with oil. If you got copper down, that is a lot. You've got the dollar down almost a full percent against the yen and down about 0.3% against the euro. You have got the Bitcoin down 661 at 57,799. Let's call it 57,800. And there you go. That is what's happening this morning with the markets. It is pretty wild and crazy out there. The numbers continue down even further. The Dow now down over 500, but Tesla up. Not as much, only up 250 at this point. It's capped off and coming down a bit. It is going to be a wild and crazy, well, the beginning of the first week of September. September, not usually a great month for stocks. All the reports coming out this week would suggest that we could have a very volatile week as people are worried, concerned about the 18th, which is 2 weeks from tomorrow. Will the Fed go down? Will the Fed not go down? And is it already too late? Has the Fed waited too late to act? That is what's on everybody's mind. Well, yesterday, Brian White and I did a video about the future of EVs, BEVs, as shown by Norway, where they're at 97% EVs now being sold Also, we took a look at the infrastructure for semi-trucks that's being rolled out right now. Excellent video. If you want to keep up with all that kind of news, there is the card right there. Looking forward to seeing you later with another Brian White video that you do not want to miss. Very excellent additional content coming this morning. And then we've got Nicholas Gibbs tonight. So that's all we got for you right now, unless right now you want to be reminded by me, oh yeah, that's right, you wanted to go and join Patreon. Down below in the description, click the link. Hey, it's been great talking to you.